Sampath Reddy is also here with us. Sampath, on the fundamental front, how are you analyzing the situation and the fundamental space for the government to the kind, shape and size of the stimulus, which my colleagues were also talking about, may be announced starting today, but in phases, the kind of savings they have from crude, etc.?
The stimulus package so far has not been nothing great, but at this point of time, the way the share prices have reacted overall across the board, they're way below the intrinsic values. It is possible that because of this lockdown and shutdown, for the next couple of quarter, earnings could be a complete washout. That's possible. But, the share prices are not a function of just a mere near-term, 2-quarter, 3-quarter earnings. They're actually the long-term earnings potential of a company. If you were to take that into the cognizance, actually across the board equity markets are way below the intrinsic value. I think this is a good time to buy. Once this coronavirus related issues get sorted out, maybe it could take 2 months or 3 months. I don't know how long it will take. But once that gets addressed and once we come back to the normalcy, it might take 3-4 months also. At that point of time, across the board, I think equity market will be way higher than what it is today. In the interim, in the next 1 week, 2 weeks, as the virus spreads, it will be difficult to say where will the bottom. But from 3 to 6 months point of view, once all of this gets settled, I think equity values will be way higher than what it is today. So it's a good time to buy. Go back and see historically whether it is Lehman crisis or whether the demonetization issues. Any kind of a panic sell-offs like this is an exceptionally good opportunity to buy for the long-term investors.
Right now on the screen, our team has collated the data of the kind of stimulus announced by various economies as a percentage of their GDP. What I see is China overall stimulus was sub 5% of their GDP of 400. 5%, 3% actually. US was 10% of their GDP, and highest was Germany, 21% of our GDP. The kind of gains we've been making as an economy due to crude prices coming down, $40–50 billion straight savings. What are your thoughts? How much can we afford? What size of stimulus can our country afford right now on the fisc front?
At this time, it's not about the ability to absorb the fiscal, burden. That's not the real impact. That's not the real issue. I think, we are, facing with quite a challenging times. At this point of time, you should not look at just the mere ability to, absorb the fiscal deficit. I think, about $20–30 billion kind of a, stimulus is needed minimum. And, we have to see how the situation, further aggravates, based on that we need to take a call. And also on the monetary front as well, there has to be, a lot more things to, to come forward.
With me, I've got an industry voice also who's joining in right now as we run up to the all-important announcement or press meet by the finance minister. My colleagues were also talking about it earlier. Mr. Rajesh Sharma of Capri Global is the MD, is also with us. Rajesh, you are someone who really works with bottom of the pyramid economy, be it small and medium enterprises, be it individuals. That section is likely to be hit most because of this impending slowdown and COVID shutdown, which was important for the country to take. What would your expectations be from the finance minister in moments from now? The press meet begins.
I think MSME in a small businesses sector is going to face the problem that their earning losses is inevitable. And in view of that, they may not be able to meet their financial obligation towards their borrowings. So what they would look for, that they need a moratorium of minimum 3 to 6 months, ideally 6 months, that their all repayment to the NBFC bank are deferred. And second, that they will look for some interest rate cut down, because to again come up to their earlier earning levels, it will take quite some time. The people's job losses are happening. The small businesses, entire cash flow is completely now shut. So in view of that, their earning losses has to be compensated, encouraged by the lower interest rate, and also the credit line has to be made available so that they can cope up with this kind of a situation, which is unprecedented. So I think the biggest demand for MSME sector and the relief can be by way of allowing them not to pay their EMI and interest for 6 months, so deferment of their EMI should be given. and interest rate reduction should come. I think these are the two things I look forward for MSME sector, for them to survive and to cope up with the kind of difficulty which has been so unprecedented.
Sampath, you were also talking about scope for rate cuts. Even some section of the market and industry believe that first of all the transmission of rates was slower, though rate cuts were taken, and then compared to a global scenario, our rate cuts also have been on the lower side than what we can. How much scope of further rate cuts do you see in next 12 months by RBI?
I mean, as you said, our rate cut is substantially lower as compared to most of the other global markets, and we have a lot more potential to do there. Yes, the transmission has been a challenge. At this point of time, actually, there's a lack of confidence in the market. Most of the, the corporate paper is actually not really, sellable. Most of the corporate paper is actually, quite illiquid today. So we need to bring back the confidence back. Maybe, government should, RBI should buy back some of the, even, some of the corporate bond, or should open the repo for the corporate bond paper as well. Some of these steps could, infuse the confidence into the market. Of course, the rate cut is something which is, which is very much needed. I think market is expecting anywhere between, 60 to 100 basis point kind of a rate cut, very soon, and followed by, how situation unfolds. Further rate cuts could also, come through.
Rajesh, you are right in the middle of the industry, running a large organization in the lending space. Tell us, how is the actual lending situation right now? Access of funds for you when you interact with PSU banks, and your average cost of borrowing in the last, say, 8-9 months, has it been edging lower, or perhaps not at the same rate as you would have wanted it to be?
The fund in last 3 to 4 months, when government have intervened and DFS has started tracking the disbursement, availability of money was adequately available. And while the cost of fund have not gone down much, because the discussion with the lender used to be only of the money, not of the rate of interest. So really rate have not come down as such for be it housing finance or be it MSME sector when NBFC goes to borrow from the banks. But National Housing Bank has given a much lower rate to the housing finance company. So I feel now inability to give us lower rate to MSME. There should be special rate applied to NBFC for lending towards MSME sector. I think that can be a relief to the NBFC as well as the end user, which are the MSME.
Sampath, yesterday I was talking to Ashish Gupta of Credit Suisse, the banking analyst, and he was raising an important point that a lot of enterprises, lenders who are working closely with bottom of the pyramid borrower are at risk going forward, because increasingly those loans may not come back, may not be paid back, some not in time, and understandably so. Some delinquencies may actually happen, and hence asset quality may come under pressure. What are your thoughts there?
There is a possibility that, because of this lockdown, especially the MFI segment, microfinance segment, it is possible that, some of the collection could, actually get delayed. The efficiency of the collections could come down. One is obviously, because of the lockdown itself will, prevent most of the, lenders to go to the, the market and collect those monies back from the, from the borrower. That itself is a challenge. And secondly, because of this, severe lockdown, I'm sure the earnings potential of the borrowers would have come down. Due to both of these reasons, yes, in the next 1 month, 1 to 2 months, the the collection efficiency across the MFIs could come down. We have to see how the MFIs will cope with this particular challenge. Yes, the spreads are quite good there, to price in some kind of this kind of eventuality as well. If situation persists for a longer period of time, yes, we could see the challenges in the MFI sector. That's why we have to see. We are waiting for even what will be the financial package going to be for some of these kind of lenders. If there is going to be a sort of a forbearance on these things, it could help the smoothen the NPA issues.
Some of those answers from Rajesh. Rajesh, how have you been coping at Capri Global with the shutdown, with the slowdown which you're staring at? What kind of discussions have you had with your branch managers on what lies ahead?
Our entire team, and specifically collection team, to keep engaged with the customer, because customers' business has come to a sudden halt. So they are not able to generate the cash flows. So we are keeping in touch with them because their EMIs are due in the March. We are trying to assess if they need any funds. While we are not disbursing any money at the moment because we are not able to have any right assessment of the situation, whether lockdown will be only up to the April mid or it might get extended based on the realistic data how it is spread. So we are taking conservative view, but we are trying to help some of the genuine borrowers who are in the grocery and essential supplies where they need more working capital. Those kind of a customers on a specific case basis, we are considering to disburse the money. However, our collection team is keeping engaged with the customer for their upcoming repayment, whether they need any help or they won't be able to do it. We are assessing, we are talking to them everyday basis. We are analyzing our entire portfolio on a risk basis, what risk it can bring to the entire portfolio. So we are keeping engaged with the team internally as well as the customer facing side so that we are know on ground situation and can take the appropriate steps accordingly.
You know, if you look at Capri Global's last couple of quarters of performance, you have managed to, maintain steady growth with asset quality under check. Are you worried right now, or would you consciously scale back growth a bit and focus more on collections so that asset quality remains in check? What would your strategy be from here on in this new environment?
All the NBFC and banking see a lot of disbursements lined up in the March because March is the month for everybody where we see the highest disbursement. So of course the growth is going to be stuck. We are not going to grow this month because of nobody is on the ground. Our strategy is going to be, yes, we are worried on the asset quality side because now looking at some of the businesses may not be able to pay their EMI. They might pay the partial EMI. So I can clearly see there is going to be spike in the delinquency. So I think let us see how the situation comes while we are keeping engaged, but collection is completely taken to a halt while our team is talking to the borrowers on the phone. But because their business is also suffering, so we are worried, yes, this month when the April 1st and April 5th, their EMI comes for the repayment, he might face some resistance and delinquency.